In today's video, I'm going to cover BlackBerry stock. It's going to be a quick video just to go over in terms of short positions. In my opinion, I think its short positions are being increased, and these are self-reported numbers. The latest update I have is as of April 30th, 2024. And before I continue, like always, I'm not a professional, so please do your own due diligence and research before buying and selling. And I do own shares in BlackBerry stock, so do keep that in mind while you're watching this video as well. Now, in terms of the ticker symbol BB for the US side, if you look at statistics and then short positions, we're at 7.99%. This is as of April 30th, 2024, about 42.59 million shares. Again, these are self-reported numbers, so they could be higher or actually only higher, right? But it could be lower because hypothetically, some of those short positions could have been closed since April 30th till today, which is May 16th. And then as of April 30th for the Toronto Stock Exchange BB.TO ticker symbol, we're at 3.34%, again, April 30th, and that's about 17.82 million shares. That's roughly about combined about 60 million shares shorted, and in terms of percentage, about 11.33% shorted. Now, the reason why I believe has increased, technically the same thing applies for like GameStop, GME, and then AMC in terms of the movie theater. But the thing is, though, I don't really focus on those too much, so I'm not 100% sure, but they seem to move in sync basically for the most part. So I think the same thing might be happening to them. And the reason why I kind of pay attention to those two is if you look at DFV or / Roaring Kitty, depending on which username you know him by, he's constantly posting essentially for the most part, just be patient kind of thing. And I think the reason why he's stating that for GameStop, because he focuses on GameStop, is because even though the short positions are increasing, which is what's happening is when the short positions increase, they're opening short positions. Let's say when it was at like $3.80. I can't remember exactly. I could check, but $3.80. If they open short positions, they're deciding to sell the stock at that price, which is they're providing additional supply for the demand. And if there's too much supply, it'll drag down the price because there's just too many people who are trying to sell, or they're selling and selling as much as they can, and then it brings down the price overall in general. So if that happens, it is a negative, but the positive technically, now, for example, the positive I say for more GameStop wise is if you have a backing of everybody wanting to buy, then ultimately they could only keep the supply supplied as much as possible for a certain amount of time. They can't just keep supplying. Hypothetically, they can if they think the company's worth nothing. But in my opinion, again, I do own shares in BlackBerry, so keep that in mind while you're watching this. But I think it could only go so low because there is fundamentals around this company, right? And the reason why I'm assuming that short positions has increased, if you see, this is the volume chart basically in terms of these ticks, and you can see the red, it's massive selling overall versus buying. Now this goes back all the way since January 24, 2024, so 24th of 2024. You could even go back to, I guess, December 23rd, so December 15th. But ultimately what I want to show is, let's just say from the January 24th, yeah, there was a sell, so you could start right here. The amount of buying versus selling, pretty much neutral. A little bit more buying, a little bit more selling, buying, selling, buying, selling. But then there was a massive uptick. Now, if you go from here, you could argue pretty much entry points is to the $3.20 to $2.87, and then it pretty much trickles down underneath $2.87 to $2.57. The reason why I want to point this out is during this whole entire time, how much selling it is. And if you look at the stock, it's not really been that low for quite some time, right? And whoever bought at this entry price point in March of 2020 has already for sure sold. Like they definitely covered, like there's no way they did not make profit and sell. And even if they didn't make profit or didn't decide to sell here, they would have decided to sell at one point here or somewhere there. And if they held throughout this whole entire time, no way they decided to sell now. Like to go from $2.74 to $3.80, no way. I think that if they were to sell here, they would have sold here a long time ago, in my opinion. So all these accumulation right about here, the amount of buy orders versus sell orders, this is excessive selling. Way excessive. There's not enough buyers that have bought and decided to sell at this point versus how many sellers there are. So there's new introductory of sellers, and in my opinion, that points to short positions being opened. And if that is the case, this drop in price is hypothetically artificial in a way. Another thing to note is a lot of buyers at this price range between the $250, $270, $280, $290, under $3. A lot of these buyers were not in terms of meme buyers. They're all buying based off fundamentals. And these buyers, in my opinion, this is just my opinion, I'm assuming they're buying it for the long term in terms of they understand the fundamentals and they're holding BlackBerry for the fundamentals for the massive growth, not for potentially about 40, 50, 60 cents growth, right? They could potentially, but again, there's way more sellers overall, it looks like, from what I'm seeing, versus how many buyers accumulated. And then you would have to assume that all the buyers bought and sold not for the fundamentals, just for the sake of a little bit of a jump. It is possible. It's not a guarantee that that didn't happen, but at the same time, I don't think that is likely the case, in my opinion. Now, again, the problem is, so for example, I want to state that for GameStop, because it is in extremely shorted territory, so above 20%, last time I checked it was about 27%, it's like the boiling point is hypothetically building up. So if they are increasing their short positions, then it's getting above 27%. For us, we're at 11.33%. So if it's increasing, let's just say it goes up to 13%. Now, the more short it is, the more of a rip it will have, because it will, not more, sorry. Technically the rip, it doesn't matter. What happens is the less buyers you need hypothetically, in a way, potentially. What I mean by that is if you could uptick it enough, then there's a chance that whoever's shorting it, like hedge funds, multiple hedge funds, it's not just one of them might decide to cover. And if that happens, then the domino effect could start sooner. When it's shorted a little bit less, what will happen is you need more buyers to step in to drag up the price, because the odds of you tripping up a hedge fund to cover their or close their short positions is not as highly likely when you have fewer than more short position holders, right? So given that, what is needed, even if we go up to 13% shorted, which is good, because again, when I did the conversion last time in the last video, just that conversion of 60 million shares being shorted, just using about 38 million, 39 million would bring us up to past $100 per share. Again, it depends on a lot of factors. It's not just like straight up coverage, closing positions. If that were to happen and there's no sellers, then that would happen. But naturally, you will always have sellers, and then you'll have other people opening up other short positions. So that would combat the escalation to the upside. But what you need basically is ultimately a lot of buyers. So technically, in terms of GameStop position or stock, it could happen. And then same thing with BlackBerry, because there is a lot of eyes on BlackBerry, and multiple times on Wall Street Bets, I see it trending, sometimes number one, usually up to like top 5, if not top 3, and if not top 1. So there is a lot of eyes. And then at the same time, the short positions are increasing. So hypothetically, everything could be lining up perfectly, but it's not a guarantee that it will happen, if that makes sense. But again, if it does happen, and if we hit those higher levels, naturally you're automatically forcing these short positions to close, because they're going to be forced regardless if they can't seem to cover based off how much cash they have in their accounts to cover the potential risk to the upside. But yeah, that's basically it for today's video. Hope you guys enjoy it. Hope you guys like it. Thanks again for watching. Appreciate it on X and YouTube. And I'll see you guys in the next video. Thanks again. Peace.